All right, so we are officially back in earnings season, so I want to go over that. I want to go over the CPI report, and then I want to go over one more story as well, and then give my thoughts on the market. First things first, if you get value out of this video, please like and subscribe. I really appreciate that. So the CPI came in hotter than expected. So the headline CPI and the core both were hotter than expected. Headline 0.2 above, core 0.3. Which is 0.1 higher than expected. So we're looking at 2.4 year over year, above the 2.3 that was anticipated, but it was lower than the 2.5 from before. So what does this mean? This most likely means that the Fed is going to be more hawkish than expected. And that definitely spooked the markets. That spooked the bond market, especially on Wednesday. But the market did close up for the week. We actually, the first time the S&P's ever closed above 5,800. So that's good news. But I am definitely treading cautiously going forward, because I think that the market clearly is overvalued right now. However, I don't think it's necessarily egregious. And another thing too, a lot of people, they hear, oh, the market's overvalued. Should you sell? Should you short the market? And the answer to should you short, definitely not, because that's like timing the market is incredibly hard. Even if you're right, not only do you have to time the market, you have to time the entrance and the exit, which is triple as hard as simply timing the market. So personally, although it can be done, I've never tried to do that. In fact, maybe I did once. I don't remember, but never a good idea to try and time the market. And the other question is, well, should you sell? Well, that really depends. Are you grossly overexposed to a certain stock or a certain sector? Then it might not be a bad idea to trim. Maybe not sell completely, but that might not be a bad idea to trim. Obviously, just my opinion there. But I think that's kind of the market going forward, is that the near term, the most likely move is still up because the trend is still intact until those moving averages, especially like your 50-day, your 150, your 200, like once those start to trend down, then I would be a little bit concerned. Right? Then I definitely would start to be a little bit concerned. I do still think we're overdue for a pullback. When that's going to happen, nobody really knows, and it might not even happen. But speaking of that, this is from George Gammon. Just a quick reminder: in 2007, stocks peaked October 9th after the Fed cut 50 basis points. On September, or in the September meeting, down to 4.75% as inflation concerns rose. Today is October 10th. Not a prediction, but this is getting weird. So, do I think that we're going to see a major downturn? No. And the reason for that, well, I mean, there's many reasons. Number one, I mean, 2008 was like a once every 50 years kind of correction, at least in the size of it. And number two, the government and the Fed, I think, are really bad at managing the economy, but they're really good at papering over and dealing with those kind of things, kicking the can down the road. They're really good at that. Is it a long-term solution what they do? No, I don't think so. But will it solve the problem in the short run? Yeah. And post 2008 and ever leading up to today, they've done a lot of things that, for lack of a better way of putting it, will prevent a major correction in the economy. Now, is it great long term? Is it a long-term solution? I don't think so. But short to medium term, and by that I mean 10, 20, 30 years, yeah, I think it is. So I don't think we're going to see a major crash, but on the flip side, I do think we are overdue for a correction. The problem is nobody knows when it's going to happen, and nobody knows how deep it's going to be. It could be 5%, it could be 50%. It's not like that's impossible, but we are overdue for a correction. But it could be 6 months or a year before that happens. And it might happen when it's least expected. In fact, usually it does happen when it's least expected. So that's an important thing I wanted to bring up because I think it is a major coincidence at the very least. But again, this very well could be the top, and we very well could see a bear market over the next 6 months, a year, 2 years. But given where the GDP numbers are at, I think it's kind of hard. I think it's kind of hard to go from 3.2 or wherever we're at to negative. So I still stand by my prediction that I think the next 1 to 2 quarters, I don't see a major correction. The problem is, the further out you go, the harder it is to predict. It's not even easy to predict short term, let alone long term. So as far as the markets go, the S&P was up just over 1%. The NASDAQ also up just over 1% this week. Let's get some exact numbers here just to see. So if we look at the SPY on the week, we started out right around 571. We closed the week at 578 and change. So it was actually up almost 1.5%. If we look at the which is very good for a week, right? If we look at the NASDAQ here, the NASDAQ, I believe, was about the same, although you also have to keep in mind that the NASDAQ is still a little bit off its all-time high. I believe about 505 roughly was its all-time high, at least on the QQQs. And we currently closed at about 492, 493. So the NASDAQ was up about 1.8% on the week. If we look at mid-caps, I think mid-caps trailed the market, if I'm correct here. No, they're actually about the same. They're 1.7. They were up on the week. If we look at small caps, I think small caps trailed a little bit, but again, I could be wrong there. Small caps did trail a little bit, but not by that much, almost 1.5% again. If we look at the Meg 7, the Meg 7, I believe, did trail the market, but actually, yes, the Meg 7 were actually down on the week. So that's very, very interesting, right? Very interesting. And honestly, I think that's a good thing because what was all of the people that were, bearish and constantly poo-pooing the stock market and the Debbie Downers, what were they saying for the last year, roughly, is, the market's just going up because of the Meg 7. And to be fair, it's only 1 week, right? Obviously, 1 week doesn't draw a major trend, but I think it's a good thing. I think it's a really good thing that the markets were up quite a bit, but the Meg 7 was down. So that's very good. I think that's very healthy because I think that's signaling stronger. That's signaling a stronger market, that these very, very mega cap names were up, but the mega cap names were down, but the market as a whole was up. Even the NASDAQ, right? The NASDAQ's only 100 stocks. It was still up very nicely on the week. So I think that's a very good thing. So as far as earnings for this week goes, we had JP Morgan and Wells Fargo released, as well as a few other companies, which I wanted to get into. Pepsi released earnings this week. They beat earnings, they missed revenue, they actually lowered guidance, although they were up quite a bit on the week, which is kind of strange, although I think that probably was just them following the market, but they did lower guidance, which definitely is a little bit concerning there. Delta, a similar story here. They missed earnings, beat revenue. They also lowered guidance. They kind of expect travel to slow a little bit in the near term. Ironically enough, they also were up on the week. So that's kind of interesting there. I like following the airlines. I would never buy an airline, like 99% chance I would never buy an airline. But I think they're a good, a decent barometer on how the economy is doing. Pepsi also as well, because a lot of people think of them as just Pepsi, but they own a ton of like snack food and beverage brands. So they're also another decent barometer on the economy. Domino's Pizza, a stock that I like, and also I think another half-decent barometer on the economy. They beat earnings, missed revenue. They were up on the week. They released solid earnings, not great, not necessarily bad either. Kind of decent earnings. I'd give them like a B grade from what I could tell. If we look at the next one here, JP Morgan, obviously the biggest of the banks releasing. They beat earnings and revenue. They also mentioned that the consumer is still fairly strong, which is another reason that leads me to believe that I don't think we see a major correction in the near term. I don't think we see a recession in the near term as well. I think we're probably 6 months to a year away from a recession if we get one, which I'm still skeptical whether or not we do get one there. I give it a 50-50 chance. I think I would want to wait a month or 2 or 3 to kind of see what happens over the next few months, and I think we'll be a little bit better, because once we get an even more clear picture on what the Fed's planning on doing, then I think we'll know. I think we'll get a better chance on the economy. We'll get a better chance on where inflation is trending. So that's what I think there. The next one is BlackRock. They released good earnings. They were up on the week, I believe. Yeah, they were up nicely on the week. This is a company that I would buy if the price was right. All of the other ones, Pepsi, if it got cheap enough, although I'm not a big fan because it's one of those companies that I think is not going to grow fast enough to make it worth buying. But if it ever did get cheap enough, Domino's I do have a small position in. JP Morgan I would take a position if the price was right. That's another one that I don't think would grow enough to make it worth it. Therefore, you'd probably have to get it for a really good price. BlackRock, another one of those companies, I definitely would buy if the price was right. It's way too expensive where it's at right now. It'd have to come down, by the looks of things, probably 15% before I would consider buying it. Although this is one of those companies that I think is a must buy if the price is right, which it definitely is not right now. Fastenal, this is another one I have on a watch list that's just too expensive to buy right now. They did beat earnings and revenue. I think they're a really good company. I definitely would buy them if the price was right. They're just way too expensive, right? A PE of 34, almost 35, a price of free cash flow of almost 35. That would have to come down probably 15 or 20% before I was interested. Although I do think they're a very solid company, though. So this is one that I definitely do have on a watch list. And the last of the bank earnings from this week was Wells Fargo. They did release pretty solid earnings as well. They did beat. This is one I don't think I ever would buy, but a solid company nonetheless. Not one I would ever be interested in buying, but I watch them mainly because of they're another decent barometer on how things are going in the economy. So the next thing too in the coming weeks is obviously the election. The election is less than a month away, and earnings. That is going to drive the markets in the near term. And then post-election, honestly, I think we could see a bit of a sell the news event no matter who wins, just because I think the market is a little overheated right now. So I'm still expecting a pullback in the coming months. Like I mentioned at the start, though, nobody knows when it's going to happen, and nobody knows how deep it's going to be. It could be 5%, it could be 15%, it could be 10%, it could be 20%, it could be 30%. Nobody knows, and nobody knows when it's going to happen. Timing the market almost never works, and the best strategy, like I've said time and time again, is simply buying good companies for good prices. Whether the market is at an all-time high or it just pulled back 30%, frankly, it's irrelevant. And the same thing goes for rates, whether rates are at 10% or 25 basis points. That's largely irrelevant to how you should invest, because whether a company is at a good price or not does not matter. It doesn't matter where interest rates are at, or whether the stock market's at an all-time high or not. So that's my strategy. That's always been my strategy, and nothing's going to change that. So like I mentioned at the start of the video, if you like this video, if you get value, please like, subscribe, comment, all that good stuff, and stay tuned for more.